Welcome back. It's a nice pullback across Asia, you'd have to say. Many of these markets, Japan's up 1.5%, ditto for Hong Kong. So let's see. We should at least start on the positive side. That's what the GIFT Nifty has also been indicating. Let's break this down to stocks now. Our team is standing by with the CNBC-TV18 list of top stocks to watch and lots of earnings on that list today. Let's kick it off, guys. Morning. Manglam, how was Colgate?
Well, Colgate was no different from all the other FMCG companies this time around. What has been the template so far? Revenue is a mild miss by about 1 to 2 odd %. The gross margins have expanded. The company's plowed back that into ad spends, and despite a sharp spike in ad spends, the EBITDA and the net profit have beat estimates, and that's where Colgate was no different as well. The top line was actually a miss by about 30 odd crores, but the EBITDA and net profit were slightly better than expectations. The gross margins improved by over 340 basis points. The company increased their ad spends by about 30% as well. They said that the Colgate toothpaste volume growth was flat, but at the same time revenue growth was higher. The street might see this as a wee bit of a miss on the top line, but generally brokerages are bullish on the long-term strategy of the Colgate management. So it'll be interesting to see where the stock goes from here.
Okay, Manglam, thanks a lot for that. Well, let's hop across to Ekta. She's here to tell us about Sun Pharma owing to Taro's numbers. Ekta?
Yes, thanks for that. Well, Taro reported its numbers. Remember that Sun owns 78% in Taro. It is listed on the US market. So net sales came in at $148.2 million, which was higher on a year-on-year basis. Sales were aided by a one-time gross-to-net adjustment, but even adjusted for that, sales were higher by mid-single digits, which was largely in line with estimates. Operating income was the positive, so $4.77 million versus an operating loss of $6.8 million year-on-year, and that resulted in a margin of 3.2%. Adjusted operating income came in at $10.9 million, which equals to a margin of around 7%. The net income came in at $8.5 million versus a loss of around $2.8 million on a year-on-year basis, and hence I expect the stock, based on the operating performance this time, to probably be in the green, or rather Sun to probably be in the green on account of Taro's numbers.
All right, thanks very much, Ekta, for that. We'll come back to you for more, but the poster boy of electronic manufacturing, right, EMS as a space, Dixon, reported numbers as well. Surabhi's here with details. Surabhi, hi, morning.
Good morning. So Dixon reported a really strong set of numbers. The revenue was largely driven by the mobile segment and the EMS segment, and also by the home appliance segment. There was some weakness in the lighting segment due to the drop in realizations and also the increased competition in that space. Overall, good set of numbers. The revenues were up 28%. They saw gross profit margin expansion of 100 basis points. EBITDA was up 37%. Margins expanded by 20 basis points, and PAT was up 47%. Now, in their mobile and the EMS segment, which is 60% of the revenues, there they saw revenue grew by 77% on a year-on-year basis and 57% sequentially, and margins also expanded 60 basis points on a year-on-year basis. Now, what could work, going forward for Dixon is that they are in final stages of discussion for newer orders with some large mobile and laptop brands, so that revenue could start coming in FY24. And also Xiaomi and itel, the two mobile brands, they will start contributing to revenues from Q4 FY24, so that could work in Dixon's favor going ahead.
Okay, got that. Surabhi, thank you very much. So good numbers from Dixon. In fact, we'll be chatting with Mr. Lal of Dixon Technologies at 9:40 a.m. So make sure you are with us when we have that conversation, talk about the business prospects going forward. Okay, back to more numbers. Vodafone Idea and Railtel. Manglam, this huge loss that Voda Idea has posted. Tell us a little more about it.
Well, the huge loss is on account of a tax provision that the company has made on account of the recent judgment that came in from the Supreme Court. But the revenues for Vodafone just about 0.6% higher quarter on quarter. The good thing was the EBITDA margins. They came in at 40% versus 39%, and that was a bit of a beat. And the loss is higher largely because of the tax provision that the company has created. Importantly, the ARPU, or average revenues per user, has increased by about 2% quarter on quarter, and that was mainly because of one extra day in the second quarter. The 4G subscription is higher as well. Vodafone as a stock has been doing well over the last few trading sessions, so expect it to see a wee bit of green, largely because of a margin beat that the company has reported. The street may discount the tax provision that they've made. For Railtel, however, there's been a margin compression. It's come in at 19% versus 23%, but the street will like the revenue growth of 40% that the company has reported, and the net profit has come in at 68 crores versus 55 crores. See some green on Railtel as well.
Okay, Mangalam, thanks for that. Well, let's wind this down with Abhishek, who's joining us to tell us about some more stocks in news. Abhishek?
Well, to begin with Aavas Finance, they have gotten a strong quarter this time around. Asset quality largely stable in terms of gross NPA ratio. Disbursals are up almost 18% quarter-on-quarter, which has meant that the AUM growth is strong, more than 22% YOY and about 4.6% sequentially. They have been able to hold on to the net interest margin at 8% level, which they reported for H1 versus 8% in the previous quarter, and return ratios also remain strong. For Home First Finance, the strong quarter continues for them like they did in previous quarter. Asset quality largely stable, 1.7% versus 1.6%. Disbursals are up 36.6% YOY and about 7% sequentially. AUM growth is strong at 33.3% YOY and 7.5% sequentially. Net interest margin has dipped a bit by 10 basis points quarter-on-quarter. However, return ratios continue to remain strong. Karnataka Bank, there is a fundraise over there, pref issue of about 800 crores. So they have participants like SDFC Life, Quant Mutual Fund, Bajaj Group, as well as Bharti AXA. Now, calculation shows that this fundraise would mean, Tier 1 increase by 146 basis points, net worth increase by almost 10%, equity dilution is about 10.7%, so book value can see a decline of 0.7%. However, this fundraise augurs well in terms of, capitalization of the bank. Back to you.
All right, Abhishek, thanks very much for that. Actually, you'll hear from the management of Home First as well in about half an hour from now. Less than that, actually. And that'll be an interesting chat as well coming up a little later here on the show. Well, let's go back to Surabhi. Navily linked NLC India and AGI Green Pack also reported numbers. Surabhi's got numbers. Surabhi.
NLC India, it was a weak set. Coal and lignite production was weak, and that impacted the plant availability factor. The revenue was down nearly 15%. EBITDA was down 29%. Margins came in at 28% versus 34% same time last year. The net profit was higher, but that was aided by a one-time reversal. AGI Green Pack, it was a strong set of numbers. Volumes was driven by increased demand from beer, liquor, and other non-alcoholic segment. The glass container capacity utilization has exceeded to over 95%. Revenues were up 20%. They saw gross profit margin expansion of nearly 500 basis points. EBITDA was up 58%. Margins came in at 22% versus 17% same time last year, and PAT was up 65%.
Okay, got that. We'll put that on our list to watch as well, Surabhi. Thank you very much. We will be speaking to the management at around 9:50 a.m. That's NLC India, so stay tuned for that as well. Quick recap of the stocks to watch today. The ones that have positive news around them are Sun Pharma, Dixon Tech, Vodafone Idea, Railtel, Aavas Financiers, Home First Finance, Karnataka Bank, and AGI Green Pack. The ones that have negative news around them are Colgate and NLC India. Okay, so we've discussed stocks, we've discussed the equity market setup. Let's find out what's happening with commodities. Manisha is joining in. Manisha, the Middle East is still where all the headlines are. Good morning.
Oh, yes, absolutely. And, with the latest one coming in with the U.S. conducting military strikes in Syria clearly has led to markets coming in into the positive in sense of safe haven buying. So while we did see a decline of 2% overnight, but we are more than 1% on the higher side for the crude oil prices here. But even with this, we are headed for a weekly decline of around 3.5%. The crude prices did gain 10% in the previous 2 weeks here. As of now, there is no crude oil supply disrupted from Israel-Hamas war, and that is what is keeping the markets quite choppy here. But it is going to be all about the U.S. Fed meeting next week. That is where the next cues would come in from. A quick word on metals, and we have seen strength come back here too. Gold is headed for a weekly gain. Prices are trading at a 5-month highs. Gold clearly has been the safe haven buying this time around. The base metal prices in the meanwhile also have seen some strength. So all tangible commodities trading in the positive right now.
Okay, well, Manisha, thanks very much for that. So commodities, again, very important to track as we go along. We'll come back with Ajay Bodke for a quick fundamental stock check. Lots to sort of throw his way in terms of views on result reactions, etc. So that's coming up in just a bit from now.